SAIC just reported its fiscal first quarter 2027 results, and whether you're an investor, a defense industry watcher, or just someone who tracks government tech, this earnings call was packed with signals worth paying attention to. We're counting down the top 10 takeaways from the call, starting at number 10 and building toward the most important story of the quarter. Stay with us, because number 1 might actually surprise you. Coming in at number 10, SAIC made a notable leadership change, announcing that Srini Ettali is departing as head of the Civilian Business Group. CFO Prabhu Natarajan is stepping in as interim leader while the company searches for a permanent replacement. CEO Jim Reagan expressed full confidence in Natarajan's ability to manage both roles, and given the civil segment's strong recent performance, the transition appears to be happening from a position of strength rather than crisis. At number 9, SAIC has formally launched a comprehensive portfolio review, with results expected to be shared on the December earnings call. CEO Jim Reagan made clear the company intends to scale back in commoditized enterprise IT and lean harder into mission-critical, higher-margin work. The review will evaluate both potential acquisitions and divestitures designed to accelerate growth and sharpen the company's strategic edge. Number 8 is Project Orbit, SAIC's internal transformation initiative announced back in February. The company has already collected over 3,500 ideas from employees across the enterprise. The goal is to increase operational agility, free up investment capacity, and fund growth without relying solely on external capital. A detailed update is expected on the September earnings call. At number 7, SAIC's qualified pipeline now stands at approximately $85 billion, but the composition has changed significantly. Enterprise IT now represents a smaller share than it did last quarter, while mission and engineering work has grown as a proportion of the pipeline. This deliberate shift reflects the company's strategy to compete where it has stronger differentiators and higher win probability. Number 6 is a major recompete opportunity that will shape the civil segment for years to come. SAIC is competing for work under the State Department's new Evolve vehicle, which replaces the Vanguard contract and carries a ceiling of $10 billion over 7 years. SAIC currently generates roughly $250 million annually from Vanguard and has won seats on 4 of 5 work streams under Evolve. Management expects the recompete to play out over several quarters, with material guidance impact more likely in fiscal year 2028. At number 5, SAIC raised its adjusted EPS guidance by approximately 4%, now targeting a range of $9.90 to $10.10 per share. This increase reflects the strong Q1 margin performance, a favorable resolution of outstanding tax issues, and the gain from the IPO of a venture investment. The company is setting targets it is confident it can achieve, and the raised EPS guidance is a clear signal that management believes the momentum is real. Number 4 is the company's record first quarter EBITDA margin. Adjusted EBITDA came in at $222 million, with margin hitting a company record for any first quarter. Even backing out the $12 million venture investment gain, margins were comfortably in the mid to upper 10% range. Management credited strong program execution across both the defense and intelligence and civil segments, and indicated the results demonstrate what SAIC is capable of on a sustained basis. At number 3, free cash flow continues to be a standout metric for SAIC. The company generated $118 million in free cash flow during the quarter, and the full-year outlook remains unchanged at greater than $600 million, translating to at least $14 of free cash flow per share this year. Net leverage declined to 3.1 times within the company's target range. SAIC also repurchased $188 million in shares during the quarter, taking advantage of what management viewed as a dislocated stock price. Number 2 is the headline financial result that set the tone for the whole call. SAIC reported Q1 revenue of $1.9 billion, representing organic growth of 0.5%, a result that beat expectations and came against the toughest comparable quarter of the year. On-contract growth came in at 5%, well above the full-year target of 2 to 3%. While management was careful to maintain conservative full-year revenue guidance given last year's choppiness, they acknowledge the math makes a negative 2 to 4% full-year outcome increasingly difficult to explain. And the number 1 takeaway from this earnings call is SAIC's accelerating integration of artificial intelligence across live government missions. This isn't a roadmap story, it's happening now. SAIC is using AI to modernize legacy code, generate operational tasking orders, enhance human-machine teaming, strengthen data fusion, and harden cyber defenses for defense, intelligence, and civilian customers. CEO Jim Reagan was direct. The opportunity isn't about selling an AI product. It's about how fast SAIC can integrate and operationalize these capabilities in real-world missions. With appropriations starting to flow and an elevated operational tempo driving demand, AI integration is the engine that could power SAIC's next phase of growth. That's the biggest story from this quarter, and one worth watching closely in the months ahead.